Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Mathew and with me is Smriti Chaudhary, and we'll take you through the next half an hour or so of trade. Like the name suggests, this show is geared towards getting you answers to all of your stock-related questions, and to that end, you can send them to us on that number that you see on the screen, or in fact on any one of our social media platforms. Let's quickly take you through how the markets are faring today. And it was a positive handover from the US markets, but the Asian markets were a little under the weather. And to be fair, the Indian equity markets were due for some consolidation, and that seems to be what is playing out today, at least on the benchmark index. In fact, on the broader markets as well. The Nifty 50 trading above comfortably the 24,000 mark. The mid-cap index trading completely flat, and the small-cap index continuing to gain ground. It was the outperformer in trade yesterday as well. Let's quickly take you through the market breadth just to see if it's more or less even Stevens or how that's panning out. And the advanced decline ratio should actually give you that perspective. But beyond that, let's talk about, in fact, the sectoral perspective as well, while we wait for that to come up on the screen. And you have the realty index that is gaining ground 1.6%. Media is up as much as 1.5%. IT is outperforming. It was one of the top performers in trade yesterday as well. On the losing end, you have the PSU banking pack that was also underperforming yesterday. It continues to do that today, but no big losers to that extent. Let's talk about the advanced decline ratio that I was mentioning earlier. And as you can see, more or less, it's not too much of a gap. The advances are in fact ahead, but just by a little bit. It's not as stark as you've seen in the recent past. In terms of the contributors on the benchmark Nifty 50, you have HDFC Bank, which is leading gains and is the top contributor in trade today, and it's followed by Infy. But there is a pack of stocks that is not doing too well, and that is the brokers, and that's on account of a regulation change that could be on the cards that is suggested by the Security and Exchange Board of India. And we're trying to understand the significance of this, Smriti, but it's seemingly it's going to be a hit on the revenues of these companies.
Definitely. Good morning, Alex.
Morning.
You rightly mentioned SEBI came out with these new rules which says market infrastructure intermediaries, MIIs, or even stockbrokers, they're going to get hit by this regulation. So essentially, they have now asked these brokers to not charge their customers, you and me, based on the volumes. Now there needs to be a flat fee. While that's good news for people like you and me, not so much for the stockbrokers. And you're seeing that impact on these stocks as well. You look at Angel One down about 7.5%. While we were just discussing right before the show started, Alex, that they largely have they've
transitioned to the flat fee model. Yes.
But look at how the market is reacting to that. 7.5% down. You have IFL Securities down about 4.5%. Motilal down over 3% in trade as well. 5 Paisa down about 1% right now. So all of this market is taking cues from this regulation. While it's important to understand, we do not know the magnitude of the hit, but it is definitely going to have an impact on the incomes of these brokers. And to get more perspective on that, let me introduce you to the guests
in a bit.
for today.
So, but we're still waiting for them to join.
We do have Samir.
Oh, we do. Okay,
we do have
cool.
Samir Dalal of Natwar Lal and Sons joining us. Samir, you've heard of these regulations, and we're seeing that impact on the stocks today. How are you thinking about it? What's the what kind of, for somebody who's holding these counters, what should that person do?
Honestly, not worry too much, if you ask me. So I don't think there's going to be, when news comes out that they have to charge a level playing field, it's not like the MIs want to lose out on certain income. What they will probably do is up the costing a little bit and figure out some other way to compensate the brokers who are giving in the larger volumes through some other means or some other method. So, at the moment, I would not worry. Yes, some impact would be there, but I think there are very few listed companies, and I don't think their bulk of their profitability or revenue comes from that part of the revenue stream. So it's not really going to change. And as long as volumes keep increasing on the exchanges, turnovers, and new client additions keep happening, this is it's like a platform-based company, right? So once you have your systems in place, the more turnover, the more revenue you generate, bulk of it transfers down into the PAT. So as over time, the markets keep growing in India, which is happening, these large broking houses will continue to grow. However, the big fear factor for, I think, a lot of these players is not this, but the fact that Reliance Jio, not Reliance Jio, but Jio Financial Services wants to enter the broking business as a low-cost business, and they might be stealing market share for them, which could be a problem. That could be the bigger problem and not this that is happening.
Okay, fair point. Just to follow up to that, Samir, we were talking about specifically Angel One, and it has made significant strides in terms of the number of clients that it is catering to. It has also gained quite significantly on the price front. I'm talking about the stock, but it's moved to a fee-based model, right, through its super app. So why is it getting hit so badly in trade today?
So a rising tide raises all ships, and when the tide goes down, all ships go down, right? So right now, because of this negative news flow, I think people are just a little bit worried. And also the stock had run up quite significantly. Now, there's also a second news that is doing the rounds in the market is that the SEBI and the finance ministry is very worried about the fact that there is a lot of high volumes that is there in the options market. And they want to come up with a way to reduce the turnover and the volumes from retail investors in the options market, especially on the expiry date. So if something of that news comes about, if some regulation for that comes about, then the volumes get hit. And like I told you, these are platform-based companies. Cost is in place. Now, if volumes were to fall, it would have an exact reverse opposite of when volumes increase. The cost is fixed. So if I was 100 rupees of revenue and my cost was 50, and if I went to 150 rupees revenue, I would do from my PBIT would go from 50 to 100. Inversely, when it comes down from 100 to 75, my PBIT would come down from 50 to 25 because the cost structure does not change significantly. So because of that, I think there is a bit of correction that's happening across the board in the market. It's not only to do with this news that's coming.
All right, that's a fair point. We're also joined this morning by Swati Hotkar. Swati, thanks so much for taking the time. It's time to jump into the queries, and there are quite a few that have already piled in. The first one I will take is on AU Small Finance Bank. And Kanya is asking about whether or not it can be held at this point. The stock is currently trading with gains of about 0.4%. It's at 676. On the fundamentals though, Samir, is this a buy or would you prefer another in the BFSI space?
So in the BFSI space, I've discussed this last week also when I spoke. IDFC First Bank remains our topic. AU Small Finance Bank is also growing quite well. They follow a similar business model where they're able to garner higher deposits because they're giving monthly interest. They are giving a higher rate of interest also. So getting fresh deposits and getting large deposits for them has also been easy. So it would definitely be one stock that one can invest in. But for me, the top pick remains IDFC First Bank.
All right, fair point. Next question is from Ashok, who's writing in from Bangalore. Swati, now they want to buy Cipla futures. Would you suggest doing that at this juncture? And what are the key levels that you would watch out for?
Yes, good morning. First of all, the view on the Cipla is a little bit cautious. The pharma sector is not really doing very well. This particular counter is facing a very strong resistance of 20 days moving average, which comes to at around 1520. So unless and until stock doesn't give the breakout of 1520, one should not go for a long position, just hold for a time being. I believe we might see some correction towards 1440 levels. So view is a little bit cautious. I will suggest not to create any long positions in future as well.
All right. Moil Limited is what we're talking about next. It's had a stellar run in 2024 so far, 58% gains in the year-to-date period. The stock is currently trading at 494, but we've got Marvin, who's writing in from Baroda, and he's bought at slightly elevated levels. Swati, he's bought at levels of 565, he says. What are the short-term and the long-term targets, and can he recover his buy price?
Yes, definitely. Moil is one of the good counter. We have seen a very good rally in this year, but no wonder after such kind of a rally, profit booking cannot be denied at the higher level. And coincidentally, or say unfortunately, he has bought at the higher levels. But definitely, I believe that this counter might find the support nearby 460 to 450 levels, and thereafter again we can see some uptick rally towards to 540 to 550. So definitely his buying position will come, but he need to hold on for a few more period or few more trading session. It's a hold from my end as long as the stock takes the supports of 470 levels. So you can hold on this particular counter.
All right. The next counter is Indus Towers. Now, Swati, this question is coming in from Jaya Krishnan from Kozhikode, and the question is, should you enter this counter? Now, we've seen a rally in this counter in the last 6 months, 1 year it has doubled. Would you suggest buying at these levels, or should you wait for a little bit of correction to happen?
This particular counter is really strong on the fundamental as well as on the derivative parts. We have seen a very good rally once the stock managed to give a breakout of a 350. It was showing an inverse head and pattern formations and gave the breakout, and almost it had achieved the target of that particular pattern. So I believe that one should not go for a long position at the current market price because risk reward ratio is not favorable. If you're getting any dips towards to 360, 370 levels, definitely one can go for a long position. For a shorter term duration, I believe the stock has a potential to reach up to 440 to 450 levels. So definitely it will be a buy call, but buy on dips towards to 370 to 360 levels.
All right. Siemens and Gokuldas Exports are the two counters that we're looking at next. And Swati, this one's for you. We've got Satish asking whether or not to buy these two counters, and he's got a relatively long-term time frame, as much as 3 to 5 years. Would you suggest both of these stocks, or one of the two, or none of the above?
The Siemens is personally one of my favorite counter. Definitely one can for a Siemens at any point of time if you're looking for a portfolio management services, such kind of a, definitely one can go for SIPs into the Siemens, but not at the current momentum. We already have seen a very good rally in this particular stock. I will suggest to hold on. If the stock corrects up to 75 to 7300 levels, definitely one can go for a long positions. But just hold on. This counter is purely for the portfolio purpose thing. I believe very soon we can see up to at least 5-digit numbers in this particular stocks. So it's a definitely buy on any dips. But Gokuldas Export, I will suggest to wait. You can go for a Siemens, but not for the Gokuldas Export as such.
All right. The next question is from Sanjeev, who's writing in. Okay, we don't know where he's writing in from, but the counter that they're talking about is Josh Engineering. They bought at a price of 2,360 rupees, slightly elevated levels. Seems to be in a downtrend for the past week. Samir, do you have coverage on this counter?
No, I'm sorry, I don't have coverage on this one.
All right. So, Ati, what are the key levels you should watch out for, and what should somebody do who has been holding from such elevated levels of 2,360?
Yes, the technical setup is a little bit cautious because on the chart we are witnessing a negative divergence in this particular stock. So that's why we are witnessing some sort of a selling or say the profit booking. We might see a downwards towards at least 1800 levels. So I will suggest if you're getting any pullback rally up to or any rise up to 2300 or 2200, one should exit the long positions. The longer term horizon is little bit cautious. Selling pressure might likely to be intensified once the stocks gives the breakdown of 2000 levels, which might take a counter towards to 1800 and so. So if you're getting any rise towards to 2200, 2250, one should exit the long position. Okay,
relatively recent listing is what we're talking about next. Exicom Telesystem is the counter that we're asking about, and Sumida is asking about this. It's had a pretty stellar run since its IPO and since its listing earlier in 2024. It's a doubler. Do you have a view on this one? Samir, do you have a view on this one?
So I've studied the company. I know what they do. We don't have active coverage, but I can tell you that what they're doing about setting up the infrastructure for the electric charging. I think that is a growth industry, and that is going to continue to grow. So there's great opportunity over the longer term. The problem again is the listed at premium valuations, and the valuations have got stretched. Like you said, it's rightfully doubled after the listing. So the valuation has moved up even further. And that is where I have a bit of a hiccup. I don't deny the fact that this is an industry that could probably have 20 years of growth going forward. So valuations can remain at a premium. But we would like to see how competition emerges in the space. We would also like to see how the opportunity to generate returns is for these charging stations. It's still not totally clear. So I would rather wait for the time being. As an investor, like I said, we don't have active coverage, but I am not buying at this point. It's time or advice to buy it.
All right, that's the view on Exicom Tele. We have to slip into a quick break, but we've got news to talk about, and this is the SEBI show cause notice to Hindenburg, and we've got a lot of details to tell you about. We will tell you after this very quick break, so do stay tuned. Welcome back. You're watching NDTV Profit. Now, there's a lot of water that's gone under the bridge with regard to the Adani Hindenburg case, but seemingly the SEBI is not done prying into some of those details. In fact, there is a show cause notice that has been sent to Hindenburg and other entities related to that Adani Hindenburg case, and there are several details that have emerged. Sajith is standing by to break down some of those details. Sajith, what are you picking up?
That's right. Market Regulator, Securities and Exchange Board of India has issued a show cause notice to Hindenburg Research, which is the US-based short seller, and some of the foreign portfolio investors like Kingdom and his entities, which are based out of Mauritius. The basic thing of which investigation comes in from the fact that the short selling activity observed in Adani shares started prior to the publishing of the report, which was January 24th, 2023. What the investigation says very clearly is that though the Adani stock started falling after the report was published on Jan 24th, the short sell began as early as Jan 10th, and it was done by a FPI by the name of K India Opportunities Fund Class F, which is owned and controlled by Mark Kingdon, who is a sole beneficiary of this and ultimate beneficial owner of this fund, and other entities which are based out of Mauritius. The sole purpose of this fund was to trade in Adani Enterprises futures in NSE. Remember, Adani Group's only one stock was in F&O, Adani Enterprises, and that was the only proxy to trade against the Hindenburg report, which was released in early Jan at the time when Adani Enterprise was in the middle of FPO, and it was almost on the verge of completing the FPO when the report was launched there. This fund made a total profit of nearly 183.24 crores. The fund also had a profit sharing agreement with Hindenburg. The profit sharing, as per the research agreement that it signed, was around 30%, but it was reduced to 25% subsequently because of the kind of time the fund took to set up in India and the regulations that it had to meet. But the entire structure of this was done by Kotak Mahindra Investment Limited, which is an arm of Kotak Mahindra Bank, and the entire FPI account was created, the trading account was created, and the approvals for trading in single stock derivatives was both on the long and the short side was undertaken, and approvals were brought in by Kotak's arm. M. Kingdon Offshore Master Fund was registered in Cayman Islands, and it was the ultimate beneficiary of that. And Mark Kingdon colluded with Hindenburg to make gains that was not part of the public information. The SEBI investigation very clearly states that as early as November of 2022, a draft report was shared with Mark Kingdon, based on which an agreement was signed. And subsequently, Mark Kingdon set up a trading account in India in January of 2023, just days before the report was to be made public. The entire process of the of the trading account was done in a very hurry, and where there was an urgency to do it so that short positions could be created. Roughly 8.5 lakh shares of Adani Enterprises were short in January, between Jan 10th to Jan 20th, and then on Jan 20th, a few days before the report was to be made public, it was rolled over to the February positions. Remember, the Hindenburg report was released on Jan 24th. That was almost the close to expiry day of January, and so the impact would have rolled over to the February month, and that's when the entire gains were made, when the Adani Enterprise shares went down by as much as 59%. Mark Kingdon and his funds basically squared off the positions between February 1 and February 22nd, in the process making nearly 183 odd crores in profits, of which 25% was shared as profit with Hindenburg, which is there. If you look at the modus operandi of this, and I think the draft report was shared between Hindenburg and Mark Kingdon. He was the sole beneficiary of that report, and this report was not shared with anyone else until the time it was made public to all the people on Jan 24th. So he went ahead and did an advance short sale before the report could be made public. The second thing was that he waited for the entire trading account to be created in India. It took some time because there are processes to create an FPI trading account, and Kotak was managing that, and it took few days for Kotak to do that. But the communication between Kotak and Kingdon shows that there was an urgency to start the trading account at the earliest, which was there. The research agreement between Hindenburg and Mark Kingdon mentions about a profit share of 30%, which was eventually reduced to 25% and agreed by Hindenburg because of the time it took them to create the account there. And Hindenburg, which claimed that there was no association with the Indian securities market, indirectly had a relationship, because Kingdon was sharing profits from the short sale which he was doing in the Indian market with Hindenburg there. The India Fund was created solely for the purpose of trading in Adani Enterprise shares. That's what the SEBI investigation reveals, and there's nothing, no other trading that took place in that account, or the trading account which was created there. Now, what kind of profits was made in the entire process? Hindenburg traded in the bonds of Adani Group, which between November 22nd, 2022 and March 2023. In the bonds trading, it got a net loss of nearly $5,000 odd. But what it did was it got nearly $5 odd million as an agreement between Kingdon Group. And what it did also was that it traded in the ETFs and MSCI India Index, as a result of which it got a profit of nearly $9.2 million, which was there. So net position or net profit that Hindenburg earned from the entire transaction was roughly around $14.5 million, which includes profit share from Kingdon Group and $9.2 million, which it traded itself in markets outside India as a result of the ETFs and the MSCI India Index exposure that it took.
Okay, so quite significant. All right, Sajid, thanks so much for giving us all of the details there. By the way, you were seeing on the screen a reaction in the stock price of Kotak Mahindra Bank, which has very clearly been named as the facilitator of these transactions and the creator of the account that facilitated the Kingdon transactions in the Adani stock. The stock is in fact at the low point of the day, down as much as 2.7%. We will get you more details on this story over the course of the day, and in case you would like to take a look at the story on the website ndtvprofit.com, this elucidates everything that Sajid has just laid out before you and provides a little more context in case you would be interested in reading it. In the meanwhile, let's very quickly take you through what's happening with the markets. We're looking at pretty much a flat trade for the Nifty 50. We're trading at yesterday's close more or less, but holding above the 24,000 mark. As I was pointing out at the start of this half an hour, the consolidation seems to be on the cards, and in fact it is playing out. The mid-cap index is now trading in the red to the extent of 0.2%, but the small cap index continues to trade in the green. If anything, I would think that the advance decline ratio would have tilted a little further. I wouldn't be surprised if it has. At the start of the show, of course, the advances were ahead of the declines, and it is in fact narrowing. There you go. So very close to even Stevens on the advance and decline ratio, and it is likely that you will continue to see consolidation through the day. Having said that, there are a few sectors that are doing particularly well in trade today, and one of those is the IT pack that is the top gainer in trade today. It was one of the top gainers in trade yesterday as well, up as much as 1.7%. Now, that brings us to the end of this particular edition of the I'm saying all you need to know, but Ask Profit. I mixed up my shows. But we've at the end of Ask Profit from Smriti and myself and the team that put the show together. Thank you so much for watching.
Hello and welcome. This is Hot Money. I'm Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade or have been the flavor of the season. But before that, a quick look at the markets, and at the moment we are looking at a quiet day of trade. It does seem like we're looking at some gains as far as the indices are concerned, but largely it's flat. The Nifty currently at around 24,150. The Bank Nifty as well is actually, in fact, looking at a little bit of weakness, a little bit of dip coming through. And it's the same for the CNX Fin Nifty as well. So those are a handful of indices that we need to keep an eye on. And of course, the Bank Nifty is also lost out on the, or rather, it is trying to defend 50 to 200 mark at the moment. But, in general, overall, we are seeing a little bit of weakness seeping through, and perhaps also unexpected lines, because you've just seen the benchmarks move from strength to strength. Now, let's move on and talk about, the constituents of the Nifty and see how things are panning out there, where there is a pull and push coming through. We do have HDFC Bank along with Infosys and L&T providing a bulk of the gains on the advance. And on the other hand, ICICI Bank, Kotak Mahindra Bank and Bajaj Finance are weighing down on the indices. In fact, that's also the reason why you have the Fin Nifty, which is under pressure right now, because it's not just the private sector banks, it's also Bajaj Finance, which is weighing on the banks. And the Fin Nifty does seem like it's lost out on the level of 23,500 at the moment. The question is, how are the broader markets doing right now? The broader markets are actually, also mixed. So we have a 0.2% cut for the mid-cap index, but the small-cap index also, just about marginally in the green right now. And even in terms of the advanced decline ratio, it's a fairly mixed picture, because depending on the index that you're taking, we'll have just about a little bit of an edge when it comes to advances as against the declines. Largely fairly evenly poised between those which are moving up and those which are, in fact, taking a knock in today's day of trade. So on the whole, it's a mixed day of trade for the broader markets, and in general, for the indices, a quiet day. With that, let's take a look at all the stocks and themes, in fact, that we're going to talk about in today's session. Starting off with broking stocks which are under pressure. We are also going to consider tire and auto companies. Of course, metals will also be in focus. Patanjali Foods and the FMCG sector as a whole, and the telecom sector as well. And to take us through his views on the several stocks and themes that we are going to take up today, we have Avinash Gorakshakar, the Director of Research at Profitmart Securities, who's joining us on the show. Avinash, good morning, and thank you so much for joining in. Avinash, before I come to you, let me take up all the auto sales that came through post-market hours. We have Puneet, who's joining us to give us an update on that one. Puneet, over to you.
So a lot of interesting trends that have come up out of this month, which was expected to be largely subdued and quiet. So one of the major things is Hero MotoCorp, which came out after the market close. It reported a 15% sales growth versus expectation of a fall in this particular month. So that's been a very positive surprise. The other one is, of course, it came slightly at the end was Tata Motors, another one which was very disappointing. The numbers, the passenger vehicle sales were down 8%, while for commercial vehicles the sales have been down roughly 7%. A similar trend has been seen in Ashok Leyland as well, which came in during market hours. Another key surprise there was also VECV, which is the commercial vehicle arm of Eicher Motors. It reported a positive 10% sales growth, the only one in the commercial vehicle space to actually show some growth in this particular month. Also TVS, which has been coming at roughly 5% growth in sales. Now this is slightly lower than the 9 to 10% expected, and potentially they have lost some share in the premium motorcycle segment, and that's possibly because of Honda, where the supply chain issues has been resolved. We saw a similar impact of Honda supply chain issues getting resolved on Bajaj Auto as well, specifically in the 125cc segment, that they could have seen some particular pressure. When you look at the top three winners of this particular month, it has to be Mahindra and Mahindra, definitely outperforming by 22% growth, the highest across segments. The second one is, of course, Hero we spoke about, and Maruti as well, showing roughly 12% sales growth in this particular month. What's what's interesting is this rural theme play of Hero and Maruti has shown some, interesting trend in this month. We'll definitely deep dive. This is the last month before the Q1 earnings. So a lot more detail into what led to this particular. It could be the elections, could be the freebies. We never know. But the exact reason, while we will deep dive into it, will be interesting. The three biggest losers in this particular month has to be Tata Motors, passenger vehicle as well as commercial vehicle, down 8 and 6%. And Eicher Motors was down 5% in this particular month. So overall, rural theme playing, Mahindra continuing its outperformance, and a few select